this aggressive growth stock pick segment, our stock pick strategist who handles aggressive growth, Brian Bolan, is going to take a focused look at industrial equipment. Kind of timely because the spring planting season down on the farm is just about ready to start.
Just about ready to get underway on your farm?
Not mine per se, but a lot of others as soon as they get some dry weather.
Right, as soon as they can, they'll be out there with the heavy equipment, moving the dirt, planting the seeds, or whatever it is they do there on the farm. I
do have farms out where I live, so I talk to these farmers.
Okay.
Yeah.
Well, then you've got the inside track and probably know that Caterpillar is looking strong lately. Obviously this industrial equipment maker makes all those big earth-moving trucks, tractors,
combines,
trailers,
the whole bit.
All those monster equipment trucks. And normally when we talk about aggressive growth stocks, we look at smaller cap, but I'm taking a look here at a couple industrial equipment names, Caterpillar being the first. But obviously the idea here is that these stocks have really held up pretty well inside of the sell-off. You see a lot of the tech stocks, the momentum names down 20, 30, 40, even 50%. These stocks have held up pretty well. One of the reasons here is it's a Zacks #1 rank. We know that earnings estimates are moving higher, and they've had a couple beats recently, and they've been good-sized beats. The thing that I'm concerned about a little bit here for Caterpillar is the level of revenue growth. You're seeing just about 1% or just a little bit more than that. There is growth there, but you have to squeeze margins to get higher EPS if you're only going to have 1% top line growth.
So is it accurate to say that what helps companies like this is that somewhere in this world there's always a need for industrial equipment?
Absolutely. When you're talking about something as big as Caterpillar, there's going to be a market somewhere that is coming off of a slow time and getting and ramping up. So there's always going to be a little something. It's just where do they find it?
Okay. And in case you don't want to own your equipment, United Rentals is around.
Right. United Rentals, and this is mostly North America for the most part here. So as much as Caterpillar can benefit more worldwide, United Rentals is closer to home here. What we've seen here with United Rentals obviously being a #1 rank is earnings estimates moving up and a few beats, as is usually the case. But the idea here is that revenue growth has really slowed down. It used to be 50 and 60%, on a year-over-year basis over the last several quarters. But over the last 3 quarters, it's just been right at 7%. So 7% for the last 3 quarters as revenue growth kind of signals that, the huge growth in this sector has kind of come and gone, and everyone's playing a lot closer to the vest. This is a great barometer for the entire economy here, because if I don't want to spend all that money and buy that, huge piece of equipment from Caterpillar, I can rent it here. But the revenue growth tells you that there's not a lot of further planning out there on either of these two, although that there is some growth. There's not that explosive amount saying we're going to be doing some big projects over the next year to 2 years, and we need this large equipment.
All right, well, rent or own, those are a couple of companies that are on your radar in this particular category.
Yeah, for right now.
Yeah. Okay, do you own either of these two?
I do not.
All right, check out other stock picks in other investing categories on our website, zacks.com. And you can link to them right off the homepage. Check back often because they change often. With Brian, I'm Terry Ruffalo.